now we've got a much bigger hole because inflation is well above 2% and it's never coming back down. I mean, not anytime soon. But the markets haven't come to terms with that reality, that what we experienced, that sub 2% inflation, was an aberration. It's not happening again. The Fed has no way of taking the inflation back out of the economy. But you got to protect your wealth. You got to protect your portfolio because we're going to have massive inflation, very high inflation. Even if we don't get Weimar Germany style, Zimbabwe style hyperinflation, we're still going to get, Argentina's type inflation, which wasn't hyper, but it was pretty damn high.
For decades, the United States has held the position of the world's dominant superpower. However, akin to Rome in the latter stages of its empire, the U.S. is undeniably experiencing a decline. The national debt has spiraled out of control, rising by trillions of dollars annually. This debt growth significantly outpaces economic growth within the U.S. Peter Schiff, the founder of Schiff Gold, sounds the alarm about the excessive global debt. He warns that both the U.S. and the EU will continue borrowing recklessly, driven more by politicians' desire for re-election than by efforts to address economic issues. Schiff expresses concern that this trajectory could lead to substantial inflation, drawing parallels to Argentina's economic history. In Argentina, persistent fiscal deficits and chronic inflation have plagued the economy for decades. Periods of hyperinflation have seen prices skyrocket rapidly, with the inflation rate averaging 190% between 1944 and 2023. This dire situation mirrors the economic turmoil often associated with a banana republic. According to the Committee for a Responsible Federal Budget, interest on the debt has nearly doubled, reaching $659 billion in 2023 from $345 billion in 2020. In light of these concerns, Schiff advises people to safeguard their wealth by investing in assets like physical gold.
I mean, you look at the interest on the national debt right now, it's over $1 trillion a year. And by the end of next year, it'll be $2 trillion. And so right now it's bigger than national defense as far as what we spend. But by the end of next year, it'll be bigger than either Medicare or Social Security. It'll be the biggest line item in the federal budget. And it's going to keep growing from there exponentially. And, the higher our debt is, we have to borrow the money to pay the interest on the debt. So the more money we have to borrow, if we're paying $2 trillion a year in interest, that $2 trillion needs to be borrowed because we don't have it, on top of the trillions that we have to borrow to fund the operating deficit. So it's just spiraling out of control. And so it has to end in either default or massive inflation. Those are the only two ways that this movie ends. And it's a disaster either way, if you're holding dollars, if you're holding any bonds denominated in dollars. But what it's most likely going to look like on an inflationary default, rather than a legitimate, we can't pay, and so we're not going to do it, everybody gets paid in money that's not worth very much, is prices go through the roof and the value of currency collapses. This means the Fed has no way of taking the inflation back out of the economy. So that's kind of an admission that we're a banana republic and that all the debt was monetized. But it's more likely that maybe they would default on the debt held by the Chinese, for example. Say, hey, we're not going to pay China. But the minute we default on anybody, of course, it's a whole new ballgame because now treasuries are no longer risk-free. They never really were risk-free, but people just didn't realize that. But the whole bond market implodes. The dollar, I think, goes down even under that scenario. But we're more likely not to default on anybody because the politicians don't want that because it's too embarrassing. It's obvious that, they're the source of the problem if they're the defaulter. They'll just inflate. They'll just print money and blame the ensuing inflation on greedy corporations, speculators, foreigners. They'll blame it on gold buyers. They'll blame it on people like me for encouraging people to buy gold or buying gold, because we helped drive down the value of the dollar. But it's their policies that drove down the value of the dollar. I'm just advising people to buy gold to protect themselves from an inevitable collapse. What we're doing to protect ourselves is not causing the crisis. It's the crisis that is coming that is causing us to take preemptive actions to preserve our wealth, right? I'm not going to just go like a lamb to the slaughter if I know that that's where we're headed. So I'm going to try to do something. And I do that. I help my clients buy physical gold. I also help them accumulate real assets around the world that I think will survive hyperinflation or very high inflation. Even if we don't get Weimar Germany style, Zimbabwe style hyperinflation, we're still going to get, Argentina's type inflation, which wasn't hyper, but it was pretty damn high.
This all points towards a future where the US dollar relinquishes its position as the dominant reserve currency. Signs of this shift are already emerging and could be fully realized by the decade's end. Peter Schiff warns that we stand at the brink of an impending debt crisis that will inevitably escalate into a currency crisis. For decades, the US dollar has reigned supreme as the world's reserve currency, playing a pivotal role in global trade and finance. However, indicators suggest that its unchallenged supremacy is dwindling. The International Monetary Fund, IMF, observes a consistent decline in the dollar's share of global foreign exchange reserves, signaling a growing interest in alternatives. Despite remaining the primary reserve currency globally, the dollar's share of global currency reserves has steadily dwindled over the past 2 decades, settling at around 58.9% in the second quarter of 2023, a decline of over 10 percentage points during this period. Schiff argues that the U.S. economy heavily depends on the dollar's reserve status to sustain a significant annual trade deficit. If the dollar were to lose its reserve currency status, the U.S. would face significant challenges in importing goods, leading to a profound shift in the economy. Let's now shift our focus to a video.
We are facing a debt crisis, which will ultimately become a currency crisis. Because what happens when you can't pay your debt is you print money. And when you print money, you destroy the value of the currency. And so that's where we're headed. And as the question is, which currency is going to lose the least or the most in relation to another currency? And it's hard to say. Right now, the yen seems to be the weakest of the major currencies. But I think ultimately the dollar has the most to lose because we're the country that benefits most from the current status where the dollar is the reserve currency in a global fiat system. So we really have an advantage in the United States that allows us to take on a lot more debt without suffering the adverse consequences that other nations would suffer if they were doing what we're doing. But I think that when the dollar's status is lost, then we're particularly vulnerable to a massive crisis where our whole standard of living is going to topple to a much greater degree than what you see in Europe or Japan. But the problem is that the U.S. economy can't function in its current form without the dollar being the reserve currency because we have no way of funding $1 trillion plus annual trade deficit. And so the dollar is going to collapse to the point where that trade deficit goes away. And what is our economy going to look like when we can't import over $1 trillion a year worth of goods that we didn't produce? It's going to look very different because those goods are not going to be available to buy. And so Americans are not going to be able to have those things. And people whose jobs depend on Americans buying those things, well, they're going to be out of work. So, the whole economy is built on the dollar's reserve status, the whole service sector economy. That's why we don't have to make stuff anymore, because we can import the stuff that other people make because they want our reserve currency dollars. They need them. But if they don't need the dollars anymore, they don't need them. Well, then why are they going to give us stuff in exchange for them?
Sure, yeah.
We're going to have to export to import. If we want to import goods, we got to export other goods to pay for it.
In essence, the United States lacks the strength to continue its role as the global leader and maintain control over adversarial nations. It's evident that other countries are already adjusting to this new reality. This decline is characterized by an uncontrollable surge in national debt, skyrocketing by trillions of dollars, far surpassing economic growth. As we navigate this uncertain future, questions arise about how the U.S. will confront its mounting debt crisis. We welcome your thoughts and encourage you to share them in the comments. If you found this content valuable, please give it a thumbs up and remember to subscribe to stay informed. Thank you for being part of this journey.